Palantir is about to report another monster quarter. Wall Street expects Q1 revenue of roughly $862.3 million, up 35.9% from a year ago. That's a huge jump and comes on the heels of accelerating growth. Palantir grew 24% in 2022, 17% in 2023, and 29% in 2024. The drivers are familiar: big AI data contracts on the commercial side and a surge in government spending. For example, Palantir's U.S. commercial revenue was up 64% in Q4 as companies rushed to deploy its AI analytics. In government, recent wins like a new $40 million U.S. telecom contract and fast-growing defense deals, its U.S. government revenue jumped 45% in Q4, also boosted sales. Analyst surveys show 2025 total revenue growing in the 30% to 35% range, roughly in line with that quarter's 35.9% bump. In short, Palantir's earnings preview story is strength on strength, accelerating digital transformation trends, new AI use cases, and even its pivot to profitability. It hit GAAP profit in 2023, are fueling robust growth. Imagine rolling charts and upbeat graphics as we break that down. CEO Alex Karp's team guided for mid-30% growth in 2025 overall, which would be a nice step up from last year. By contrast, after booming 2020 to 21, Palantir's growth slowed to teens in 2022 to 23, so this resurgence is notable. To color it further, about 63% of Palantir's revenue still comes from government contracts, but its commercial arm is surging. It's landing Fortune 500 clients for AI, think airlines, telecoms, banks, and they're buying in. One big Asian carrier recently went live with Palantir's Foundry platform to optimize its operations, for instance. These factors, stable government backlog plus a fresher growth engine in enterprise AI, underlie the lofty 35.9% forecast. In short, Palantir's growth story is rooted in both long-term tailwinds and recent momentum. Stock surge amid tariff turbulence. Palantir's stock has absolutely exploded in 2025. As of early May, it's up roughly 60 to 63% year-to-date, easily making it one of the S&P 500's top performers. By comparison, the S&P 500 itself is down around 8% YTD and the tech-heavy Nasdaq is roughly flat to slightly negative. In other words, Palantir is bucking the market downtrend by a mile. Some of that rally is just momentum. It was the best performer in the S&P 500 as of late April. But part of it is thematic. In a tariff-driven, volatile market, investors have poured money into software and data plays that seem immune to trade war shocks. Wall Street quips that companies like Palantir, pure data/AI vendors, should feel almost no disruption from tariff skirmishes. That theme showed up in April, when President Trump announced new tariffs and China retaliated. Palantir actually fell sharply. It plunged about 46% from its February high of $125. Yet it rebounded fast once calmer heads kicked in. By May it had recovered and was back near all-time highs. In short, volatility has been wild, first a deep drop on trade war fears, then a rip-roaring rally as investors rotated into AI stocks. A picture comes to mind of a roller coaster chart, wild swings with one heck of an upward trajectory. In a B-roll you might show a market ticker screaming higher, or a cargo ship, for tariffs, cutting through rough seas, then a Palantir logo lifting like a rocket. Compared to peers, Palantir's gain is eye-popping. Many tech names are still retreating or flat. The Motley Fool notes Palantir's YTD 57% jump made it the best S&P performer, partly because of that tariff-immune appeal. Uber's another red-hot stock this year, but Palantir's rally stands out since it's more of an obscure data company than a household name tech platform. This strength does have a whiff of AI mania, investors banking on Palantir leading the AI data gold rush, but it's also a bet on resilience. Graphically, think of overlaying the S&P 500 line, dipping, with Palantir, soaring. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. But wait. If you are interested in stock news updates that might be relevant to your financial targets, join us and become a member for member-only videos. Find the link in the description section below. GF value, the bear case price tag. You'll hear a lot about the GF value, Guru Focus's proprietary fair value estimate. Right now, Guru Focus pegs Palantir's GF value at just $27.12, versus the actual price around $124, implying a 78.18% downside. Yikes! What's GF value? It's essentially Guru Focus's attempt at a valuation floor, calculated from historical PE ratios, sales multiples, past growth and future estimates. You can think of it as a conservative benchmark. If Palantir were to revert to normalcy, GF value says fair price today might be in the $20-$30 range. Why so low? GF value models assume Palantir's sky-high multiples and growth will moderate. It's based on an algorithmic blend of things like historical average PE, expected earnings growth, even some Buffett indicator-style capital flows. Guru Focus explains it as, derived from historical trading multiples and both past business growth and future performance estimates. The bottom line, at $124, Palantir is trading way above whatever this valuation model spit out. The relevance of GF value is to check for overvaluation. It doesn't necessarily predict price moves, but it highlights extreme cases. A GF value of $27 means a huge gap between the bull case and the measured case. Many investors ignore GF value, especially in momentum rallies, but it's worth noting because it suggests the stock is richly priced by traditional measures. In a video, you might flash up the GF calculator UI or an overbought gauge graphic when discussing this. Momentum versus reality check. Here's the paradox: Palantir's stock is on fire, but all the fundamental signals, and many analysts, say caution. On one hand, Palantir just keeps running, new deals, bullish AI buzz, those accelerating earnings, so momentum players are piling in. On the other hand, the consensus price targets and ratings say, hold on. For example, one fool analyst notes that of 27 analysts covering Palantir, the median target is about $96, which is below today's price. That implies a near 20% downside if the stock were to meet average expectations. So even Wall Street's moderately bullish crowd isn't at $124, they see it settling in the $90-$100 range. Meanwhile, Guru Focus's view, $27, is far more bearish. Analysts are split. The brokerage consensus is still a hold, rating 2.9 on a 1 to 5 scale, reflecting that tug-of-war. It's like watching a win-at-all-costs runner, PLTR, sprinting full speed while a cautious coach keeps checking a map, valuations. To add color, Palantir trades at insane multiples. After Q4 2024 results, its market cap was reported at about 354 times this year's GAAP EPS. For comparison, a typical tech highflyer might be 30-50x earnings. Sales multiples are similarly nosebleed, around 67x next year's sales. In a normal world, those metrics would trigger alarms. This gap between excitement and caution is market sentiment in a nutshell. Investors are suddenly love-struck by anything AI/data, but models like GF value or average analysts keep a bowl of ice water handy. You could animate this by showing a stock barometer with one needle pointing to bubble and another to hold. Or show side by side a rocket emoji and a caution sign for valuation risk. The takeaway is that Palantir's ride has been thrilling, but it's not without potential downside. Sentiment could flip if growth slows or AI euphoria fades. As one key takeaway put it, despite growth, analysts recommend a hold, as the stock may be overvalued relative to its GF value. 600x return, dream or delusion? Okay, time for the wild part. Could Palantir ever go 600x from here? That would turn $124 into about $74,400. Realistically, that sounds like comic book numbers. A 600 bagger would require Palantir doing something nothing else has, essentially becoming as big as the biggest tech giants, and then some. Suppose Palantir consistently grows 50% a year, which is far above management's guidance of 30%. Even at 50% CAGR, it would take roughly 16 years to multiply 600-fold. If growth were only 30% each year, roughly their forecast, it'd take closer to 25 years to hit 600x. So we're talking mid-2030s or beyond, at the earliest, and that assumes no hiccups. In money terms, Palantir's revenue would need to climb into the tens of billions, probably way north of $20 billion by 2040, while staying absurdly profitable. It's our privilege that God, the creator of heaven and earth, will bless us abundantly, make us the head and not the tail if we love him and obey his commandments. Please acknowledge him in your plans and he will direct your paths. Proverbs 3 verses 5 to 6. Want more information? Please check the description section. Also again, if you are interested in more relevant stock news updates, consider becoming a member. Link in the description section. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you educative and transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today, your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Thank you. See you in the next video by God's grace. We love you, and blessings to you.